Welcome everyone to today's Title Topics webinar. These are Alta's free presentations that we offer every month on issues important to title professionals. I'm Jeremy Yowie, Alta's Vice President of Communications, and today we've got a great presentation that's going to focus on home buyer and seller trends and profile some of the consumers that are out there that are buying homes over the past year. The goal to help you learn a little bit about housing trends, who's going to be driving the market over the next year, so you can get a little bit of better understanding of the types of title orders that may be coming into your office over the next 12 months. Before starting, I just need to touch on a few housekeeping items. A copy of today's presentation can be downloaded from the handout section of the Go to Webinar window on your computer screen. If you're listening only on the phone, please send me an email at jyohe@alta.org, and that's jyohe@alta.org, and I can send you a copy of the presentation after we complete today's webinar. All participant lines are muted for today's presentation. If you have a question, please use the chat box function, and we'll address questions at the end of the webinar. Today's presentation is being recorded. After we've completed the processing, the recording will be available on Alta's website, and that address is alta.org/title topics. Again, that's alta.org/title topics, and there you can find an archive of all our previous webinars from the past several years. Also quickly need to thank Fidelity for once again sponsoring our Title Topics webinars this year. Their support allows us to continue providing these educational opportunities free of charge. And with that out of the way, let me introduce today's speaker. Joining us is Jessica Lautz. Jessica is Director of the National Association of Realtors Member and Consumer Survey Research. Jessica spends a lot of her time analyzing data and writes annual studies for NAR, such as the member profile, the profile of home buyers and sellers, which she'll be reviewing today, and the commercial member profile. Jessica, thanks for joining us today and sharing some of this great info that NAR collects. While a lot of the attention of our members has been on TRID and how the new mortgage disclosures are affecting transactions, it's always important to keep a pulse on what's going on in the real estate market and really understand who are the consumers that are ultimately buying these homes. So with that, Jessica, I'll turn the presentation over to you.
Great. Thank you so much for having me today. This is my favorite report that I work on, so I'm pretty excited to have any opportunity to really share it with other people and get it out there. So I'm going to jump right in. There's a lot of myths that we hear about in the home buying market today, and I'm going to go over some of those, and the media loves picking up on these myths, but most of them are just generally not true. So one of them is that Gen Y is going to be a generation of renters, and I'm going to use Gen Y and Millennial interchangeably, and I define it as those who are under 35 years of age. We hear that they want to be a generation of renters, but they're never going to own a car, they're going to live with mom and dad. If they ever needed to borrow a lawnmower or an axe, that they're not actually going to buy one themselves, they're just going to be a sharing generation. We also hear that there's this mass exodus of the suburbs. Everyone's building up all the city centers around the country, and they're all being gentrified and rebuilt, and now Detroit has a great food scene. And we also hear that baby boomers are all downsizing. They're all swarming to the south. They're all going to move there. And at some point, Florida's just going to become its own little island full of baby boomers floating off into the sea. None of those are actually true. I will give one caveat before starting this presentation. The caveat I'm going to give is that we know from our investment education home buyer survey that we also do on an annual basis that only 60% of the home buyers in the market are actually primary home buyers. So a home that they're going to live in all year round, and is actually going to be where they have their family and raise their kids. 21% of homes on the market today are actually vacation home buyers, and 19% are investors. So this presentation is actually only going to focus on primary home buyers. to the blue, and will not encompass vacation home buyers and investors in the market, which are a sizable share. So this study actually began in 1981, and what we do is we survey home buyers who purchased a home in the most recent year. So we're actually looking back from June until July, or July until June rather, who purchased a home, and we released this report in November. We've been doing this since 1981, and so this report has really been refined over time. And there's a lot of cool things that happened in 1981. MTV was launched, Reagan was president, Beyonce was born, Paris Hilton, myself. So a lot of cool things in 1981. And because it was released in 1981, there's been really a lot of changes that have happened in the real estate industry, the internet being one of them. So really over time, this became a pamphlet report and took quite a while to put together. And now we put it together in just a month or so, and it's ballooned to 200 pages. So it's really transformed. So some of the trend lines that we have go back all the way since the beginning of the report, and some of them we can only go back about 10 years. So jumping right into the data. Since 2002, we've been tracking income for a pretty substantial period of time, but we can see this rise in income among recent home buyers. And that really speaks to tightening credit in the market and looking more favorably at home buyers who have higher incomes, looking more favorably at home buyers who happen to be married couples over singles, and also looking more favorably at repeat buyers in the market as opposed to first-time home buyers who are often younger with lower incomes. One of the other changes that we're seeing, unfortunately, because I'm sure that many of you listening in today at some point in your life may have been a single buyer, so a single female or single male buyer, we're actually seeing a decline in these types of buyers. Sorry, this is my second presentation today. I have plenty of water here, so during the presentation I'll be taking sips of that. Back in 2006, we saw that the share of single female buyers was 22%. Today we just see it at 15%. And part of that is because of tightened credit conditions. Part of it is also due to that drop in first-time home buyers, and part of it is due when you're actually applying for a home loan or bidding on a home. Lenders and potentially sellers in the market will say, you know what, I think there's a better chance that a married couple will be likely to actually afford the mortgage. They have dual credit, and they're actually going to accept that married couple over that single buyer in the market. So this drop in first-time home buyers, what we have seen is that it is currently at 32%. The historical norm in the market among primary residence buyers is 40%. The lowest point that we've seen it is in 1987, when I'm sure many of you were still working in the real estate industry. And in 1987, if you remember back, there was double interest rates. So looking in the 10 to 15 to 18% range. And we also saw the rapid decline in the stock market during that year. The stock market crashed. So it was not an opportune time for home buyers to be in the market. And so they weren't investing in the stock market, and they certainly weren't investing in homes and real estate. We can see this high in 2010 of 50%, and that was because of the first-time home buyer tax credit, and then a rapid decline following that. One of the things that I want to highlight, though, is that Gen Yers, millennials, are actually the largest cohort of home buyers for the third consecutive year. They're purchasing a home because anything that they do a little bit of, Gen Yers, they really become the largest generation who is actually doing anything. So finding that cool hipster coffee shop to purchasing a home, if they're attracted to it, they suddenly are swarming that area. Gen Y is the largest cohort that we have in history, and so they really are tipping the scales in home buying as well. One of the things that I think is really interesting is that 64% of first-time home buyers just bought a home for that pure desire to own. And so what that really means is they're not looking at this for tax credit reasons. They are looking at it, sure, for financial investments, but really when they're purchasing because they want to own a home of their own. Their motivations are really to have that housewarming party, to paint the walls lime green if they want to, and orange, and really accept that this is the place that they live. This isn't a temporary rental situation. The desire for home ownership is very strong among the younger buyers. They're just having the inability to actually be able to afford a home right now. We also have data from a new survey called the Home Survey, and we're going to be releasing this on a quarterly basis. But this first release was in December, and we know from that report as well, we asked renters on a monthly basis, why do you currently rent? Do you want to own a home in the future? And what's holding you back from owning a home? We found that 88% of renters do want to own a home, and this is even higher among our younger generations. Those who are millennials, 94% of them who rent do want to own a home in the future. But financial ability to actually purchase a home is the one that's holding them back. So where do you go if you can't own a home, or perhaps some of your friends can, but you personally can't? You're more likely to end up living with mom and dad, unfortunately, especially if you're unemployed. So we have seen double the number of multi-generational households since 1980. And it's not just the young kids who have graduated from college who are moving in with mom and dad. It is also an older generation, the silent generation, who's moving back in with the baby boomer parents. In fact, one of the questions that we started asking a few years ago was the share of recent home buyers who are multi-generational home buyers. And we define this pretty broadly. So this can be someone who has children over the age of 18 living there. This could be someone who's caring for their aging parents. It could be both. It could also be someone who has children under the age of 18, plus the aging parents, and so on. So many different family, different combinations that could be living there. What we found is that 13% did purchase a multi-generational home. We actually found when we cut this by generations that over 20%, 1 in 5 younger boomers actually purchased a multi-generational home. And that commonly is because they have children over the age of 18, plus their aging parents, and 40% of them actually have children under the age of 18. I think that this chart, when I have presented it before to this group, becomes pretty interesting to you. This is the longest timeline that we have in collecting this data. We only started collecting it, unfortunately, in 2006. But we have seen that the expected tenure of home buyers when they go out to purchase a home today is substantially higher than what we have seen in the past. So first-time home buyers, looking back in 2006 and 2007, was just 6 to 7 years, their expectations of living in a home. And post-recession and post-housing crash, now when they purchase a home, they are planning on moving there for 10 years. It's even longer for repeat buyers at 15 years now. So the standard housing choice today is 3 bedrooms, 2 baths, a detached single-family home. Typically, we are looking at a home that's just under 2,000 square feet. This does go into that expected tenure. When home buyers today are purchasing a home, not only are they locking in that low interest rate, but they also are able to purchase a home that's about 150 square feet larger than what they had been purchasing in 2006. So what that means is that impetus, that push to get them out of that past home is no longer there. So perhaps it's getting ready in the bathroom with your spouse, or having that extra bedroom for potentially a child who comes along. And so no longer is there that push that you need to get out of that home. That no longer exists. One of the other things is we're seeing that the largest generation who's actually purchasing condos and townhouses is actually our older generation. So it's not our younger generations who are traditionally purchasing a single-family home. we see that our silent generation is the one that is downsizing. However, we don't see downsizing among our younger boomers and even among our older boomers. While they could be downsizing, they're downsizing less than 100 square feet, so really not that much of a downsize. One of the other things that we're seeing here is that, sure, Gen Y lives in the city center today, but this is something that is not a new phenomenon. We have seen this among our other generations as well. So we're Gen Xers, that generation who loved reality bites and wanted to reinvent the city centers. We saw that among them. We saw it among our Bob Dylan generation. We see that Greenwich Village, the baby boomers transformed that. But today, you can see that Gen Y is transforming Brooklyn. So it's not something that's new to our culture. It's just something that the largest generation is doing a little more of because they are the largest generation. One of the interesting things that we can do is we have a home feature study, and we can cut a lot of our data by income, by household composition, by area in the country, etc. One of the things that's really interesting is that single males have a slightly higher income than our single female buyers, but we see that their laundry list of things that they want in a home is quite long, much longer than our single female buyers. And so they're really wanting a brand new place that has cathedral ceilings and stainless steel and granite, walk-in closets, really something that really sparkles. Among our single females, they really have a shorter laundry list of things that they want. We also see that commuting costs are very important to 30% of our buyers, which is actually a pretty small amount. And some of the reasons why that is while commuting may be pretty important, we know that this goes down the list when we look at school. So if you add a child to your household that is under the age of 18, the prominence of wanting a school that's close distance, but also the quality of school, goes right to the top of your list. And no longer your commute factors in as much. So we are really seeing that play a role there. A few years ago, we added a question on environmental features. Heating and cooling costs have always been at the top of the list, and the main reason is because it affects the buyer's pocketbook. So anything that's going to be an added cost at the end of the month, along with your mortgage and your HOA or potentially your condo fee, your heating and cooling costs are right up at the top of the list, especially at this time of year. So that really factors in. Landscaping and community features are most important to our older buyers. Perhaps they have the ability to enjoy them more, but they really are thinking that that's more important to them. Just in the last 2 years, we started asking a question about solar panels. You can see it's not very important to too many buyers, but we are seeing that that somewhat is actually growing in size. The search process has really changed, so it's not the same. Look at the MLS book at the end of the week in a real estate agent's office, and you have to visit that office physically to find those listings. So that's absolutely changed. Right now we're seeing that the first step in the home buying process is looking online for properties for sale, as well as looking online for information about the home buying process. Now, buyers who are repeat buyers are more likely to reach out to a real estate agent, contact a mortgage banker or lender to see how much they can afford, because they do have a point of contact they have worked with before. I would highly encourage all businesses related to real estate to make your site mobile ready. We have seen an enormous increase in the last year of buyers who are using mobile sites. We just started collecting this data 2 years ago. We were very late to the game here. But we saw it in the 40s, and now it's well above the 50% range for home buyers using mobile sites. We find photos very useful, detailed information, interactive maps. People are literally on their phones at every moment, so making things interactive to them, easy to understand, giving them all of the information possible is very important. One of the disconnects, however, that we're seeing is among our realtor preferred communication. They're still communicating via email and telephone. When today's home buyers, many of them in the market, would prefer a text message, I am. So there really is a generational disconnect as well. The top reasons for using social media is really to build the community around them for marketing, exposure, free advertising, but just building those relationships, especially to your past buyers or as well as your future buyers, so that they know that you are actually an agent, work in the real estate industry, and want to help them out. Real estate absolutely is word of mouth, building connections, and having those referrals around you. It's especially true when we look at our agents. In the market, 40% of their business is from repeat clients and from referrals from past clients. And we see that more than half of buyers use an agent that was referred to them, and 2/3 of sellers use an agent that was referred to them. We ask our buyers a laundry list of items that can be difficult in the process, and we see that finding the right property with heightened inventory is the most difficult part of the process. It can be especially frustrating in areas with low construction, where there aren't a lot of starter homes, starter condos, and not a lot of places to really bid on and be the multiple bidder in that property. One of the trends that we have consistently seen, even with the internet, is this huge rise in the use of a buyer's agent and the use of a seller's agent. And I'm asked frequently, is are realtors just going to go the way of the travel agents? And I can absolutely say no. People do not feel comfortable not having representation with them. They absolutely think the process is complicated. They haven't purchased a home, even if they're a repeat buyer, in 9 to 10 years. If they're a first-time buyer, this is especially true. They're actually using agents at higher rates. 69% in 2001 purchased a home from an agent, and this is skyrocketed to 87% this last year. One of the other things that we've seen is that on the seller side, we've actually recorded this data point since 1981, but today we're at an all-time low of FSBO sellers at just 8%. It does happen that this number is cyclical, and we have seen it rise to 1 in 5 at twice in 2 different points, but today it's at an all-time low of 8%, and it's continued the trajectory of going down. Today, 89% are selling through an agent. So that is all I have for my formal presentation. I would encourage you guys, if you are on Facebook, Twitter, Pinterest, etc., to follow our accounts. We do post on there about 5 times a day. And I'm just one of the many researchers that we have in our department, and they all have their own specialty areas. And we do post quite a bit of variety on everything that we have as well.
All right, thanks, Jessica. Great summary on all the home buyer trends. Quick observation question before we get to the Q&A from the attendees. I noticed 2 references to Beyonce in your presentation. I guess you're a fan?
Yeah.
Okay.
I am indeed a fan.
All right. Yeah, all the single ladies and her birthday. So. All right, as a reminder, if any of the attendees have a question, please submit them in the question box, and we'll pitch them over to Jessica, and we'll get your questions answered. Maybe to kick things off Jessica, you mentioned on one of the slides the disconnect from the way consumers communicate, more electronic, phone, website, versus how realtors are still wanting to communicate with their clients, which is the telephone. Last year, the American Land Title Association also launched a homebuyer outreach program to help our members explain the benefits of title insurance. And there's material that we provide that can be provided directly to the home buyer, and then there are resources that Alta members can provide to realtors. I don't know, based on your research, can you glean, like, what would be the best uh, information that our members could provide to realtors that they could then in turn provide to the home buyers? Or is it going to be an electronic, a PDF of a document? Do you just do you want?
Sure, that's a good question. One of the things that we've seen grow in popularity is infographics. So anything that can be easily consumed, a PDF, it sounds like, of a document is going to be take a while to read. So anything that people can quickly consume, I feel like attention spans are just reducing. So little cartoony figures do seem to be working, both for our members, but also for clients, because they can easily consume and understand that information.
Okay, good, great advice. I mean, when you start trying to talk about the benefit of an owner's title insurance policy, it can get very wordy really quick. So some of the
that sounds confusing.
So some of the materials we have developed is really condensed. So like there's one that are specifically for realtors to provide to home buyers. It's the top 7 reasons to get title insurance, and it's real quick snippets. Mm-hmm. But yeah, definitely more visually appealing and less text. And then ultimately driving the consumer to a website if they want more information.
Absolutely.
Any thoughts then from, since our listeners are title and settlement agents, anything that they can be doing to help realtors meet the needs of today's buyers? I mean, this might get a little bit from, what your study is looking at, but, maybe pulling a little bit from the NAR membership profile and connecting the dots from the home buyer profile. And what could title agents be providing? What kind of services are realtors looking for?
Sure. I think there's a lot of new agents to the field, so any way to communicate to them and provide training. It is a growing industry right now, being a realtor, so knowing that and keeping that in mind. One of the other things I think when connecting the dots is that our membership is growing older. The median age used to be in the 50s, early 50s, even in the 40s, but we've seen that the median age of our members is 57 years old. So it's only growing in age. And so I think making sure that even our seasoned members are educated is very important, and knowing that they might prefer more traditional ways to communicate as opposed to social media that's really embraced by the home buyers today.
Okay, great observation. Question from the audience on relating to the decrease in FSBOs and increase in realtor-assisted sales. Question is this due to limited service brokers?
It's a really good question. So we do collect that data point too on whether the seller used a full-service traditional, whether they used a limited service, but still a real estate agent, or whether they just use someone who just listed online. And what we've actually found is that that has actually stayed very consistent over time. So more than 80% are actually using a very traditional broker service, someone who does all-encompassing, markets the home, prices it, listed on the MLS, does open houses, so on and so on. So we actually are not seeing a change in that, and a rise in limited service, at least at this time. I know that they are very popular in some markets.
Okay. All right, thank you. Question about the slide that addressed what buyers listed as the most difficult steps, and it was finding the right property was the most difficult. However, the second one was all the paperwork, and I'm guessing that involves the paperwork at the closing table. Does NAR have any data, or do you know if are home buyers wanting an electronic process? Are they wanting to get documents earlier in the transaction? That's one of the CFPB's goals, is to help consumers better understand their transaction.
Hmm.
Do you guys know if that's maybe kind of underlying the message that the paperwork of the consumers, and I guess what does that mean if that's the second biggest
Um,
problem?
that's a really good question. Paperwork has, since we added it in, it wasn't always traditionally in this question. It has been near the top of the process. So what we have seen in the past few years is that finding the right property for the last, I believe it's 2 to 3 years, has been at the very top of the list. Um, what happened in 2010 is that we saw that getting a mortgage was at the very top of the list because it was so difficult and credit was so tight at that moment. And we did see it drop quite a bit. But since we added paperwork, it has been about second or third. I would say that it could be every aspect of the paperwork, and I actually think that the paperwork could be in the mortgage process as well. So maybe you have been pre-approved and you're all set to go with a mortgage, but today I believe there's a lot of documentation that is required for that mortgage, and you just have to gather so much. The other thing that we see, too, is that everything is more difficult for our first-time home buyers in the market. So just getting the mortgage, understanding the process, the people were finding the right property, especially because there's so much competition in the market at that lower level, we are seeing that those things are most difficult for our first-time home buyers. So maybe setting the expectation and going in that this is going to be hard, but it's going to be worth it in the end. So I think that's part of it as well. But unfortunately, we just ask it as paperwork, so we don't have a lot of detail over, is it the mortgage paperwork? Is it just everything is overwhelming?
Mm-hmm.
Yeah.
Yep. No, it definitely is overwhelming. I mean, I've bought several homes over the years. I mean, I'm in my 40s now, but there still is a lot of paperwork. And if you try to think of it, the transaction from the first-time home buyer perspective, they're definitely wide-eyed, like, oh my goodness. So,
Yes.
to touch on a little bit more about the first-time home buyers, and you mentioned the millennials they're the highest percentage of these first-time home buyers, and they have been for the third year in a row. Um,
Hmm.
could you share any input as far as so where are they buying? Where are these millennials first-time home buyers buying? What are the kind of the hot markets that are growing?
Oh, that's a really good question. So we actually have, this is not from this data, but we actually do have a release that was put out last year, and it is the top markets for millennial home buyers. I will say that millennials are the largest generation overall, not just among first-time home buyers. So they are the generation right now. One of the other things I didn't really touch on, I kind of glossed over, is the competition that they have in the market. They're buying very similarly priced homes, about $170,000, very similarly priced to our investors and our vacation home buyers in the market, who are often paying all cash or financing a very small amount. So their competition is very steep among these different types of home buyers when we think about the housing types that are out there right now.
Okay. And so if you're looking for data on that, you can go to NAR's website. Um, I don't know right off the top of my head, but I'm sure
Yep.
the
It's Realtor.org. Also in the Economist Outlook blog, Nadia, I believe, was the author of that report.
Okay, great. Great data there. So if you're looking for where markets are growing as far as first-time home buyers, millennials, you're looking to maybe try and capture that market space. Um, Real quick, and this is maybe just my own ignorance. The silent generation. Who are these? Who comprises this group?
Oh, sure. So I believe their age is 69 and older. So 69 to 89, they're solidly into retirement. They are often downsizing, and they're thinking about comfort when they're actually purchasing a home, and proximity to healthcare facilities as well is actually in the top of our list.
Okay, got it. Thank you. All right. Any other questions? It looks like we don't have any more that have come in. Once, twice, no sale. All right. Well, Jessica, looks like you're off the hook for the Q&A. Any other final thoughts, or you said you had two presentations today, so I think we'll give you a break.
The only final thought that I'm in a hotel room, so housekeeping is trying to keep me out. The only final thought that I would say is that we are doing a survey right now on TRID and Know Before You Owe and our Realtor reaction to it, and what has happened in the past few months for them. So that report will be out in about a month, so I would check it out at that time.
Oh, fantastic. Thank you for mentioning that, because I totally forgot. So yeah, that'll definitely be some interesting data. Alta has as well collected data from its members pre-implementation of TRID to get feedback from our members' offices and from consumers on the closing experience. And we are collecting data now post-TRID implementation to see how things have changed with the closing disclosure. So we're excited to be collecting that data and seeing what changes have occurred. One other question has come in, Jessica, if you don't mind tackling it. It was about the 42% who start online. Do you know the breakdown of this? Is this on Zillow, Trulia, Realtor.com?
Oh yeah. Unfortunately, we don't even ask what website you started on. We just kind of we ask what their first step in the process was. There are website stats that are out there on traffic to all of those websites. So
yeah, and that is an interesting question, because if you dig deeper and if you're thinking about doing some digital marketing, last fall, Alta, to try and increase awareness about the benefits of title insurance, advertised on Realtor.com in a couple of markets, and directed then the consumer to our consumer education website to get more information. And it didn't break the budget. It was a rather inexpensive way to promote title insurance. So it could be a possible way for a title company looking to target a certain marketplace. So anyway, all right. Well, I think that will conclude today's presentation. Looking ahead, our next Title Topics webinar, our free presentations, the next one will be in April, and we'll focus on cybersecurity. In the meantime, we're launching kind of another webinar series that we're going to hold quarterly, and that one will start next month. That webinar will be on February 11th, and the presentation will focus on the basics of the Graham-Leach-Bliley Act. Richard Andriano of the law firm Ballard Spahr will be providing an overview on the core requirements of the law, the latest government actions and recent court cases to help you understand when it's legal to share customer information. So keep an eye out for registration information on that webinar. And with that will bring us to the conclusion of today's presentation. Jessica, thanks again for joining us. I think this is the third year in a row, so always a pleasure having you.
Thank you.
All right. I hope all the listeners found today's presentation useful. Take care, everyone.
Thank you so much.